Good afternoon, traders and investors. Will back here with another one. Happy Friday to everyone. Hope you guys had a good day and a good week trading. Now, today, guys, the markets were slightly up, but I am not satisfied with the bull's capacity to keep it up, in other words. So we're going to take a look at the major indexes here, our major tech names. Keep in mind, we do have a very big CPI release next week on Wednesday. So that will be absolutely crucial here for the markets here, as we could potentially head lower if headline inflation does have a slight uptick, and the markets could react negatively to it, potentially also contributing to our negative September seasonality here. So now that the week is closed, we're going to focus on our weekly charts as well here and try and get a better indication here, guys, if the bulls are set up nicely for continuation over the next few weeks, or if we may be due for some pullback here. So let's get into it right away. And at the end, we're going to go over a detailed view of my portfolio. I actually closed my big Tesla position and reset slightly lower. We're going to go through all of the math in detail on that, just for full transparency with you guys. That's what I want to do on the channel here, to really give you guys a good idea here of what a year looks like here trading the wheel strategy. So without further ado, let's get into it, guys. So SPY up 0.15%, QQQ up 0.14%. Really neutral day on the better half here. If you can take a look at the heat map here, we'll refresh it real quick. Fairly mixed market once again here. Can't really etch out some big gains in our major indexes, right? So technology mixed, financials mixed, and healthcare mixed as well, right? No clear direction on where these markets want to go, which is why we did end up with a fairly negative day. No real negative outliers on the day, but as also no real positive outliers either, right? So on the one-day relative performance here, you guys can see the market was led by energy and utilities, but they're very small sectors, guys. They don't contribute largely to the gains here, right? Communication services and financials, bit of gains here. And to the downside here as well, we did have a pretty mixed market on the day here. 1 week relative, you can see that the only positive sector was energy, as the market continued to push lower the entire week. So where do we stand on the index here, guys? Let's take a look, right? So we were looking for the continuation of the daily uptrend. What was I saying in the 2 days previous videos, guys? I don't like how much of the move the bulls have given back. We're now trading below our moving averages here. And you can see today we actually struggled to maintain above these moving averages, using it as resistance at this point, guys. So are we potentially setting up for a daily downtrend reversal, or are the bulls going to be able to start taking back more of this move here and really continuing this daily uptrend? Let's look to the weekly for clues, guys. Weekly still looks somewhat healthy, right? Our weekly did reject off the 12 EMA on the weekly here. So one of two possibilities, guys, could happen for the bulls, right? The weekly uptrend could just continue. If CPI is good next week here, wouldn't surprise me if we do just continue to grind higher and potentially take back more and more of this move. However, if it's bad, guys, we could end up with a potential tightening range into September for pretty much monthly consolidation further, right? You remember me saying that August and September were potentially months for monthly consolidation. The bulls with tons of space to do it here, but the next week is going to be absolutely crucial here to confirm whether seasonality is going to play out as expected here, or if the bulls can really start continuing this grind higher. But so far, guys, we did have a pretty good bounce, but the bears in the last week, guys, able to take back a lot of it here. So this daily trend, in my opinion, is the most important here. We really need to see, can the bulls take back more and more of this move to set themselves up here for continuation of the daily uptrend? They can either do this, or if they have to two-step it, because this was a fairly large move down here. Absolutely crucial, because if they set the daily downtrend here, guys, then weekly consolidation will continue, and we will look to the lows here of 433 to provide somewhat of a big support for bulls to play off of, right? Next few weeks are going to be absolutely crucial. On the QQQs here, same results, right? Daily uptrend was confirmed by the bulls here, but now with this heavy drop here, the bulls are not able to push here, and you can see that reflected on a lot of our major technology names, guys. They're just not pushing like they did all the way back here, right? So a bit of muted performance from technology here. Now, same situation as SPY, right? Can the bulls continue this daily uptrend, or will they roll over potentially after CPI next week on Wednesday? If they do roll over, guys, we are heading potentially lower. We will be looking to the weekly lows here around 355 to really save this weekly tightening range, because if we start flushing them here in the next few weeks, that will be a confirmed weekly downtrend. Monthly consolidation will be well underway. And if it's a weekly downtrend, guys, it will take quite some time to reverse, potentially into the month of October, mid-October, right? So very, very, very crucial here. What's going to happen over the next few days, next 3-4 trading days, can indicate the market sentiment and the market movement for the next month, month and a half. So very, very, very crucial set of data coming out next week. XLF financials, this is one of the main reasons, guys, that I'm not happy with SPY. XLF and XLV cannot get it done, guys. We can't do it without them. I can't say it enough, guys. They represent such a big proportion of our S&P 500 that without their participation, it's going to be very difficult. So XLF financials still looking for the daily higher low here, trying to set in the bottoming process, right? Anything above 3360, I'll remind you, was looking for a daily higher low for potential continuation of the upside. Well, the bulls are bottoming out, but unable to push through. Now trading below our moving averages here on the short term. On the weekly as well, right? We were looking for the weekly confirmed uptrend. 3260 was our low, right? Set it, but now unable to do it. So the best thing that bulls can hope for, guys, if we're not able to confirm this daily uptrend, the best you can hope for is potentially a weekly tightening range. Because one thing's for sure, guys, if we lose this 3360 level, it will be weekly downtrend, and then you will come into monthly consolidation. Bulls with a lot of space, anything above 3130 is just going to be a monthly higher low. We do have some good support down here, guys. But as I said, if we do set up the weekly downtrend, it's going to take a long time, right? It's going to take a long time to reverse these weekly downtrends. You can see it will take potentially into October to do it, right? So the confirmation of these daily uptrends here on SPY, QQQ, XLF, right? It's very, very, very crucial here the next week of trading, in my opinion. XLF healthcare, right? XLV healthcare, excuse me. Healthcare just not getting it done, guys. Weak bounce on the last 2 days, right? Very weak bounce. Bears seem to be in control of these short-term timeframes. This drop is such a big drop here, and the moving average is acting as resistance. Also trading below our previous support line, which is now resistance. You can see that the market is pretty much rejecting perfectly from here off of our last 2 daily trading candles, right? So bears are set up nicely here for potential downtrend continuation. Line in the sand level 131 is going to be absolutely crucial, guys. If we lose this, right, the weekly downtrend at this point, guys, is pretty much confirmed, right? We did crack the lows. We did close below our previous low here. So weekly downtrend is in motion. Weekly downtrend in motion, guys. Still monthly consolidation on XLV. At this point, anything above 126.50 is just going to be looking for continuation of this tightening range. The bulls with a decent amount of space to work with here. Not too much space, but still decent, right? Past 2 months, we've only consolidated near the highs. Still rejecting from our 12 EMA, that yellow line right there, right? So we're just going to try and maintain this monthly tightening range until the bulls are ready for a break here. May last into, like I said, end of September, early October, for the bulls to be able to reverse these weekly downtrends into something significant, right? Potentially October, right? So keep an eye on that. IWM Russell, growth stocks. Poor performance on the week, guys. Same thing, right? So SPY and QQQ are looking very, very healthy, but that is largely due to technology. The rest of our indexes are just not performing, and even the Dow Jones, guys, everything is lagging. Seasonality is really plaguing this market right now, right? So bulls in jeopardy here of losing the daily uptrend. We were looking for anything above 181, 82 for continuation for this daily uptrend. But now with the bears having taken back so much of this move, wouldn't surprise me if we either get a tightening range or even potentially a new daily downtrend. New daily downtrend would mean that weekly consolidation is underway. And then, guys, this 181.80 level is absolutely crucial, because if the bears flush this, it will be a weekly downtrend. We'll be looking towards our lower support pocket here, 180, and monthly consolidation will continue here. So a month, they have a good amount of space. Anything above 170 is just for further monthly consolidation here. Bulls still looking to set the monthly trend change eventually, right? So they got it right here, but now we really need to really confirm this monthly uptrend here with good power. We're going to eventually need to crack this 200 psychological. And as you can see, we're a fair bit away from it right now. So a lot of work for the bulls, guys. Need to reset the daily uptrend here. Need to really save this weekly uptrend as well, right? The best they can. But The next few days and weeks are going to be crucial because if they do not do it, we could get some of this longer term consolidation here into October. Dow Jones, same thing, right? I don't like how much of this move the bears have taken back, right? The bulls had one job to do and couldn't get it done. Look, how much of this move have they taken back? Over 618, almost 70%. So it gets really, really difficult for our bulls here to V-shape this, especially we're under our 34,600 area. We're under our moving averages here. Don't get me wrong, on the longer term, like if you look on the monthly is very, very healthy. But we are in monthly consolidation August and September so far, right? So Dow Jones bulls, we'll see. Can they get back up to our higher end here to the 35,000 level? Or will they potentially roll over into a daily downtrend? Then we would need to look out, guys. Line in the sand level is 34,000 daily and weekly. Roll over the 34,000 on the weekly. You'll be in a weekly downtrend. We do have a decent amount of support back here. But that point still, 32,700 is your monthly higher lows. I don't believe that the bulls are going to lose the monthlies. Still a decent amount of space. And there is tons and tons of support down here, right? But on the short term, over the next few weeks, could get dicey. The next few days are key to see if the bulls can keep bouncing and set. All of these charts look the same, right? Need to see if the bulls can keep these going. I was telling you guys that I like the size of the weekly bounces here on a lot of these charts. SPY had a very good weekly bounce. QQQ had a very good weekly bounce. But look at the rest. XLF weekly bounce, quite poor comparatively, right? XLF, if you look here, right, the bounce was not the greatest, right? Compared to SPY and QQQ, didn't take back enough of it here. If you look on XLV Healthcare, there was no bounce. As a matter of fact, they confirmed the weekly downtrend. IWM bounced a little bit, right? Decent little size bounce, but in 1 week, the bears took it all back. And now the Dow Jones, not the greatest bounce either, and now the bears taking it back, right? So they had great bounces, guys, but it's very possible that they've just sacrificed a lot of the work that they put in. So now let's take a look at Big Tech here, see how we're shaping up. And now I'll show you guys why I'm a bit concerned for these shorter term time frames. Let's get one thing out of the way. All of the monthlies look absolutely beautiful. Don't get me wrong. We're in a long-term uptrend. I'm still extremely bullish on this market. It's just potentially over the next 2, 3, 4 weeks. We have CPI. We have Jerome Powell coming out in 2 weeks as well with an interest rate decision, right? August and September are known to be poor months for seasonality. So all of these things come into play here. I do believe, however, the market's going to be very, very good October, November, December. So keep that in mind. All right, so let's get into this, guys. Apple, as I said yesterday, losing the daily uptrend here. And although they did push up here today, you can see closing near the low of the day here. So Apple bears now are starting to take over here. Look at this weekly close as well, right? Weekly close here. The 172 area is going to be absolutely crucial next week, guys. If we lose 172, it'll be a daily confirmed downtrend at this point. It will also be a weekly confirmed downtrend. And at that point, you just continue monthly consolidation. That's fine. Anything above 124 is just for a monthly higher low. Keep an eye on my sweet spot. If Apple does pull down into the lower 170s, high 160s-ish, I will be picking up some shares. But the bulls have a lot of work to do if they want to reverse this. I'll need to see a bigger bounce. And then eventually they have to start back all over here and reset a daily uptrend. Key level for next week, guys, is going to be this 172 area. Now, AMD as well. AMD had a great start to the morning, giving it all back here, closing negative on the day here. So AMD as well, not able to get it done. We were always looking for the daily higher low here. Bulls still trying to set it here. Next week, absolute crucial level here is going to be the 100. All right. So if for some reason we flush down, the 100 is key. Why? Because it represents our weekly low. All right. So we are in a weekly downtrend here, but if the bears flush, again, then we will just be in continuation of a weekly downtrend, which is the expected move until the bulls reverse it. Still in monthly consolidation, guys. Anything above 82, we'll just be looking still for a monthly higher low. AMD now with pretty much 4 months of consolidation at this point, guys. Did a good job holding this range for a very, very long time, but we will see. Can the bulls set the daily higher lows and push above? I'll need to see a crack of 111 to confirm this uptrend at this point, right? But if we keep trending lower, guys, keep an eye on your 99.60 level. That is the very crucial area here to save the furtherance of a weekly downtrend, right? So keep that in mind for AMD. AMD, if it pulls down here in the 100 area, guys, I'm buying. Amazon Amazon, decent little day of performance as well, 0.28% to the upside, but even Amazon kind of trapped in this whole little range that has been trapped in, right? The rest of tech is not participating. Going to get excessively difficult for our lead bulls in the sector, Amazon and Google, to push higher when the rest of the market is not cooperating, especially if Apple is not cooperating as well, right? So Amazon, daily higher low confirmed. We are looking for the continuation. I'll need to see a break of 140 to really confirm that this daily uptrend still has legs here. And then we'll be looking all the way up to the 143 area. But one thing at a time, guys. It's a good thing we are above this horizontal support area and above our moving averages here. But we'll need to see next week what happens. 133 is going to be absolutely crucial. Next week, if we can either do one of two things. We're either going to crack 140 and continue this daily uptrend to the upside here, or we're going to crack potentially 133 and potentially set up for a new daily downtrend. That would mean further weekly consolidation, potentially furtherance of the tightening range. For now, Amazon looking good. It is a weekly uptrend here, but as long as we don't crack these previous highs here, guys, all the way up in the 140s, right? You can't say that we're out of the woods yet. It could end up in some consolidation if the rest of the markets don't cooperate. So we'll take this one day at a time on Amazon. Just keep these two key levels in mind here. Now going down to Google. I hope I don't sound too bearish, guys. It's not the intent. It's just saying I'm just trying to set up the expectations here for the next few weeks if indeed the markets do continue to trend lower based off of SPY and QQQ's movements. Now, Google looking fairly healthy compared to the rest of our tech names, right? So Google looking for the daily higher low here. Pretty much got it yesterday, 134. We'll see. Can Google bulls push above 139 pretty much, right? This 139 level. Can they get it done to really continue this weekly uptrend? If they don't, for some reason, if for ever which reason, we do pull back here and lose at this point, 134.15, you will be confirming a daily downtrend. At that point, it will be weekly consolidation. Anything above 128 is a lot of space for the bulls to potentially consolidate on the weekly. And the monthly we've already went over, guys. The monthly looks extremely good. No red flags on the longer time frames, but we'll just be curious to see how can the bulls play this out. Two ways, right? We can either do a tightening range here if you want the bulls to continue, or we're either going to absolutely smash this whole 139 area, continue to push higher. If for ever which reason we roll below 134 at this point, guys, will be a daily confirmed downtrend, and then you will have to look for weekly consolidation. Meta bulls here. Meta bulls not able, what I've been talking about all week for the pretty much past 2 weeks, right? 300 psychological. Still cannot close above our 300 psychological here. I don't like the size of this meta bounce. I don't like the shape of it either, right? Bulls are really struggling, guys. So daily uptrend is confirmed, but I don't like this price action, guys. The bulls can't even crack the 300 and close above it, right? They're having a very difficult time. So we'll take a look next week here, guys. But next week, what you want to see is you either want to see a break of yesterday's high, which is 306, to really give the bulls some more legs here. Or if we come down here, guys, watch out for your 277 level. Break 277, your daily uptrend is lost. Your weekly downtrend is set at that point. So 277, crucial level on meta. If we do consolidate on the weekly, it'll just be continuing consolidation on the monthly for meta at that point. May take all the way until October to reverse this. But one thing's for sure, guys, if I don't start seeing some better movement on meta here, right? As in a lot of our other tech names, right? Apple, Meta, even Microsoft looking the best, guys. If you don't have broad market participation from all tech, it can't just be Amazon and Google looking good at this point, right? So just keep that in mind on Meta. Not satisfied with the price action on this one. Going to be looking, can they crack yesterday's high and really put some more space here? Looking for the daily higher low, right? Looking for it for the continuation of this daily uptrend. Going to need 306. Or do we potentially trend lower, get too close to here, set up potentially for a daily downtrend, and flush for weekly downtrend continuation into monthly consolidation that could last into October? Crucial. Microsoft, guys, same thing, right? Microsoft just grinding higher. You can see, guys, the past 2 weeks of movement, it is not this. It is not this. It is not clean, right, guys? So that's what I want to really issue here today, guys, is just a fair warning to everybody for the next couple of weeks. 333 was the level. You can see Microsoft has been struggling with this one for the past 2 weeks as well, right? So daily uptrend is confirmed. The bulls do have it at this point, right? Anything above 319, still looking for your daily higher low. We are above the moving averages, but I would have much more preferred to see Microsoft do something like this and already be up into the 340s. The fact that they're struggling here with NVIDIA earnings close, right, is kind of a worrying sign here. If we do come down here, guys, look out for 319. If we do come down too much and crack 319, it'll be daily uptrend lost at that point. At that point, we will be looking higher to the weekly, and you guys know this weekly bounce on Microsoft is not the best, right? If we do come down here, keep a very, very big eye on your 313 level here. Be absolutely crucial. If we confirm the weekly downtrend, well, it'll just be further monthly consolidation for Microsoft. Very, very, very safe, however. And if we come down to my sweet spot here, anything from 310 all the way down to 285, guys, I will be buying Microsoft. So I don't want to sound too bearish, but the proof is on the bulls at this point. The bears have shown that they're playing heavy, heavy defense right now. Can the bulls reverse this since SPY, QQQ, and Big Tech flying higher? NVIDIA here also. NVIDIA down on the day here, 1.5% almost here. What was I saying, guys? We're at that crucial level, 450. This 450 level into next week is going to be absolutely crucial. It is still, right, daily uptrend, but now we're in somewhat of a tightening range. Now, the bears have taken back all of this most recent move, all of it, right? So next week, do we potentially set up for the daily downtrend crack 250? Which would mean if we get the daily downtrend, weekly consolidation is underway. Anything above 404, going to be looking for the weekly higher low. Have some good moving average support down here, right? But one of two things has to happen, guys. Since we're in a tightening range right now, you either need one of two things. We're either going to break of the all-time highs up here at 503, or we're going to come down here and flush 250, lose the daily uptrend, potentially daily downtrend. We're going to be looking for weekly consolidation at that point. So can't really say much on NVIDIA since we're kind of trapped within this range here, but the bulls have their work cut out for them on a lot of these names. Tesla as well, right? Tesla just trapped in a range here. I really like the size of this initial move up, but you can see, guys, for the past pretty much, right, week and a half of trading here, Tesla has been stuck, unable to break and close above this 259, 260 level here, which is a reason why, because of all the factors I've been saying in the video, right? Big tech, XLF, no participation, XLV, no participation, growth stocks kind of down, Dow Jones even down, right? It's just, it's giving me the impression here, guys, that the market is not as strong as we would like it to be here. We may need to wait for more positive data, so I don't want to risk it. That's why I closed my Tesla positions and reset a bit lower here. So Tesla, I mean, no real red flags other than the fact that the rest of the market is showing red flags. And I know that Tesla is not going to be able to keep it up alone, right? So weekly bounce was underway here. I don't like how these two weekly candles closed here. Gives me the impression that we may be due for further weekly consolidation. If that happens, guys, we're looking for anything above 212 to really save this weekly uptrend, potentially for a reversal. But if we do start trending lower here on the weekly, expect the same thing, right? Expect it to take a few weeks at least to reverse. Line in the sand level on the daily, guys, 242. We're now in a massive tightening range on Tesla. You can see it better on the 4-hour time frame, right? Just a big tightening range. So we'll see if the bulls can keep this tight and continue trading above our moving averages here. But if we do flush the 240s here, that will be, unfortunately, daily downtrend confirmed at that point. Daily downtrend confirmed will be further weekly consolidation, guys, and monthly consolidation will just continue for Tesla. But anything above 153, still just looking for your monthly higher low. A lot of space left for Tesla bulls to do that, but it may take some time here, guys. Tesla will not be able to do it on its own if the market is not cooperating. So we're going to keep a very close eye on this. 242 is a crucial level at this point. And obviously to the upside, I'm going to need to see a break of at least 259. And now Palantir and PayPal before we get in my portfolio. So Palantir here, right? Palantir as well. Super weak the entire week, guys, kind of trading around this $15 mark, right? Palantir as well, not showing me many signs at all. Very tough to get a good idea of what's happening on the daily here, right? It's kind of a daily tightening range at this point, but look up to the weekly, guys. We're consolidating on the weekly near the low of the move. This could be interpreted as a weekly bear flag. If we do flush here, guys, keep in mind, 1360 is your line in the sand level. If we flush below 1360, it's weekly downtrend confirmed into further monthly consolidation on Palantir. For the upside, I need to see a break of 1640, guys. If you want the bulls to really control this and really start taking back more of this weekly bounce here, I'm going to need this break of 1640. If we keep trending lower here, guys, bulls can potentially, if we lose this here, guys, we could potentially set up here for the daily downtrend into further weekly consolidation. Then we'll really be looking at these 1370 lows here. Can the bulls hold on to this move on Palantir here? But as this week, not much movement. PayPal again pulling back another percent here today. So we're getting dangerously close, guys. The bears have now taken back almost the entire move since $60, right? 7 days of trading, 3 days down, take it all back, right? Just goes to show you the type of market that we're in right now. $60 is your daily high or low. At this point, the best the bulls can potentially get is maybe a tightening range. Unless we get broad market participation, guys, it's going to be very tough for the bulls to V-shape this into this higher 65, 66 area, right? So what are we looking out for here, guys? Next few days, can the bulls continue to push, potentially tighten this up and break for a new daily uptrend? Or are we going to set the daily downtrend here and go into further weekly consolidation and start retargeting here our 57 lows? If we come back down into these 57 lows, I will definitely be buying here. But the bulls with a lot of work to do on a lot of these stocks here to really start proving it to us that they want the next few weeks and months for them, right? The bears are in short-term control of all of these charts. And now lastly, guys, let's get into my portfolio. I'm going to have to do some quick maths for you guys. So give me a second. And let's get into it. All right, so on the year-to-date performance, guys, right? So I'll show you guys the year-to-date just so you guys know. We're 36.46%. Had a couple, we did come down a bit this week here, largely due to the down move on Tesla and Estee Lauder, which I closed out as well. PayPal coming back down, CSIQ trading back down. So a lot of my positions, guys, did start trading back down. That's why I redid a few things here, but we are still trading above our SPY here on the year. SPY up about 16%. We're still up about 36.5. So good some outperformance on SPY. And we are still trading ever so slightly above the NASDAQ here. So NASDAQ roughly about 32% here as of yesterday here, and we're still up 36.5. So still outperforming our buy and hold NASDAQ, which is not too bad if you ask me whatsoever. But I do think we'll be able to juice this portfolio nicely and outpace the NASDAQ into the end of the year once we get some more broad market confirmations here. I have freed up a bit of buying power. I've been trapped in a lot of positions for the past month, so haven't been able to do much on the account, namely Tesla. So now I'll show you guys what we're doing with that. So let's get into it right away here. So my positions on the week here, guys, you will see that the GMs, let's go actually, the GMs I'll tackle in a bit. The hogs, 33 puts, right? Ended worthless on the day. Why? Because hog traded above Harley Davidson, traded above 33. So those will just get called away. No harm, no foul. The GMs here, what happened with the GMs? So you guys will see that I wrote the GMs the other day here. Where are they? The GMs are down here, right? 33 puts for 20 cents. What did I do today? Because GM, I waited all the way to the close for these guys. GM was trading almost at $33. It was flirting here. Look at this last couple minutes, right? Flirting here. Wasn't sure if it was going to be assigned or not. So what I did is I rolled the puts down. I'll explain, right? So what I did is I wrote them for 20 cents. You'll see that right here. We bought them back, as a matter of fact, here. You'll see I bought them back right at the close here for 4 cents a piece. So we pocketed 16 cents. Then I wrote the 32.5. So we went one strike down to about 32.5 for next Friday. Okay. And what do we get for those? We got 37 cents, right? So a net credit here between the two of 33 cents plus the 16 cents we pocketed, right? So all in all, we're good at about 50 cents. We have 50 cents of pocketed premium, which means that if I get assigned next week at 32.5, my break even is 32.5 minus 50 cents a share. So it'll be all the way down here at 32. 32, bottom end of this range, right? Roughly. So I will take that. It was a decent trade, good premium on it. So I will be running them for an extra week here. CSIQs, the average down put play is here. CSIQ, you can see I got assigned at 35, got assigned at 35. So let's pull this chart up right here. Assigned at 35, our break even is 32.09. I said I would DCA if it comes down into the 25 area. Well, we're almost there. So what happened on the day today when we were towards the lows here? I did take advantage to write some CSIQ 25s, only one contract here for about 20 cents. So we will see if CSIQ trades below 25 and I end up with more shares. If I do end up with more shares, my break even comes all the way down to roughly about 30, 29, high 29s is what I calculated it out to be. So we're going to continue to lower this average cost here as CSIQ trends towards the lower end of our massive 1 year plus range here. So that's pretty much it for CSIQ. Estee Lauder, I closed this, right? So I bought these leap calls here at around $48 earlier this year. I closed them this day at $28.15. So that's about a loss of $2,000. But if you remember 2 weeks ago, I had covered calls on these. I closed them for a profit for about $700. So $2,000 loss today, minus $700, $1,300 loss. Why did we close them, guys? It's not that I don't like Estee Lauder as a company, right? But I would rather get them lower if they do trend lower. I pretty much opened this position all the way back here when the stock was trading around 175, right? But this weekly downtrend has no signs of stopping yet. I will want to see at some point for me to get back in this trade. I need to see a weekly uptrend reversal. And with how the general markets have been performing, if we do continue to get a few more weeks of downside, potentially another month of downside here as the market continues to correct, well, I'm not going to get stuck in Estee Lauder catching a monthly falling knife, especially if it does come down here. It does have further support, better support in the whole 140 area, right? But as of now, it's kind of an in-between area. I don't like how severe this weekly downtrend has been. The bulls have not been able to put in much of a move whatsoever. Even this most recent bullish move up has gotten pretty much eaten away here. So really not happy with the bulls' inability here to really recapture some of our moving averages. And the past two earnings, guys, have just been a disaster for Estee Lauder here. It's not that I don't like the company, but obviously, since they're leap calls, I'm on a timer here. So I would rather wait a bit, potentially get a better price, wait for my weekly uptrend reversal formation to potentially happen to re-enter this position. So close the loss, guys. Risk management is key here, all right? And you can see TMF still haven't averaged down on this one. I'm looking for 575 or better. CSIQ is assigned. PayPal's also haven't been able to write any covered calls on them yet. Bitcoin, obviously, very, very tiny position in this account, but still down on that. And my banking shares, you can see 888 shares. I just averaged in yesterday again, another 100 shares. At 1850, our average is down to 1991. This is the Canadian banking ETF, and you can see this thing has gotten absolutely hammered pretty much since last year. I started buying in the $20 range, and it's come down a bit more here, guys. So we are going to continue to roll this one. We are going to continue to DCA into this one, guys, and you can see it pays a monthly dividend. Dividend yield is up to 8.23%, right? And the banks usually don't drop their dividends whatsoever. It's just we've had a decent amount of drawdown here, guys, over the past pretty much since the end of July here. So even this position as well, right? You can see down at $1,250 on this one. But when it does start moving back to the upside now, a lot of big deals on these Canadian banks. When it does start moving to the upside, watch out, right? So PayPal, CSIQ, and this banking ETF, you can see that it is eroding my gains here. So there's about, roughly about $4,000 here that I can recapture if these were to trend back to break even over the remainder of the year. And now lastly, let's get into Tesla, guys. So Tesla, you will see that I closed my Tesla shares. All right, so let's get into some math. I did write some more puts here. So even though I closed the shares, I wrote some puts for lower. I wrote the 235s and the 240s for next Friday. These covered calls that I had today are completely worthless. The 257.5s and the 250 calls as well ended completely worthless, but I closed them at 13 cents. I wrote them for about $3.17, and we closed them at 13 cents earlier today. Pocketed the premium for both of these. Now, let's get into exactly what happened. You can see on Tesla here, you'll see, right, these where are they? Right here on Tesla, the 250s. These are the 250s that I closed for 13 cents, as I said here, guys. So you'll see that I closed the Tesla shares, 200 shares closed at 247.15. Didn't like that Tesla once again lost the hourly uptrend here, guys. So we lost the hourly uptrend, potentially setting up for an hourly downtrend. So I was like, you know what, guys? This market is not inspiring me the greatest confidence here over the next couple of weeks, so I'm just going to take a bit of risk off the table. I'm going to reset lower. If I do get a sign, my new break even down here will be 237.50. And I'll show you guys how much money we either made or lost on Tesla since holding them all the way since the 20th of July. Unfortunately, we lost some money, but we're going to break it all down for you guys in full transparency right now, all right? So let's do some quick math together so you guys know that I'm being 100% legit here, right? So you can see that we were assigned here 270 puts. They're right here on July 28th, right? So wrote them here, wrote them here, right? So this is the line right here, wrote them here on July 21st here, and we got assigned. These were for July 21st, got assigned. You can see that I received a $5.99 credit for the 270s, right? So my break even on Tesla was 264.01. And then we started writing all of these covered calls. So we're not going to take this premium. Let's see how much money from these 240 calls and downward. We'll see how much money we got for everything, right? The realized totals are right here. So the 240 calls, right, minus 290.09, start off on a negative. This right here was a mistake. These were supposed to be 280 calls, but I wrote the 280 puts. You can see that this happened right here. This happened 5 minutes before the close on the 19th. And the next morning I realized what I did and I said, oh crap, I wrote the wrong position and I had to close them right away. Obviously 280 was deep in the money at that point. And I was like, what am I doing? I think the stock was trading around like 260 something, right? And I wrote the 280s. They were supposed to be calls, but unfortunately went with the puts. And then I went in the money because the rest of the market wasn't cooperating. So this is a mistake, but I absorbed the loss anyway. So minus 374.86 plus 1244.64. Those are these 240 covered calls that expired worthless on that week, plus 2864.65, right? So these were another bit of 240 covered calls here that we also closed at a profit that week. Then again, down here, this extra line, 230 calls this time, plus 2454.65. So this was me riding the stock on the way down, right? All the way down. And then you can see when we started losing money was these 212s. 212s came with negative because I had to start following the stock back up. So from all this premium that we collected, minus 1769 for those 212s. Then the 227s also. 227, you remember last week, Tesla had a 7% day to the upside. So I had to once again absorb that loss as well and reset higher. So we had to minus this once again, minus 2811.01. We're left with 1318. And now we're pretty much where we are today, right? So what did we do? We wrote the 245s here, right? 245s, this was last week, and the 265. So I did a split. So we're going to add that to the premium here. So plus 121.93 plus 220.15. So we're left with 1660.81. Now, today's premium, the premium that I closed today, right? We have to add that to this as well. So you can see that 317, or sorry, excuse me. You can see that these were for today, right? The 250s and the 257s right here. So 317 and 141. Well, I showed you the 141s are still open. They were completely worthless. They're right here, right? So we pocketed that 140. And then we closed 317 minus 13 cents. So we closed $304 extra today. So total profit on Tesla Premium was $2104.81. We had from the moment I was assigned with all this premium collected. So divided by 200 shares, that's $10.52 a share. So let me pull up the notepad here, guys, right? So, right, assigned, this is where I labeled everything clearly. I hope you guys can see this, right? Assigned 270 puts with 599 credit, 264.01 break even, right? So I showed you guys 1660.81. This was how much premium was collected. Plus today, we get 2104.1 total credit, 1052 per share. Same thing we did together, right? So now we were assigned 264.01 minus the $10.52 per share premium, right? So now we're down to about 253 and a half-ish, minus what we sold at a loss for that I showed you guys. It gives us a loss of $6.35 per share. So we're currently down $6.35 on 200 shares of Tesla. So about $1,270. However, with the premium that I was able to write, this premium right here for next week, okay, we started reducing this loss a bit more. So minus 289, you'll see it right here, minus your 289, right, for the 240s, and then the 235s, 173, we get minus $202.31 per share total. So 635 minus your 231, the premium collected this week, is $4.04 per share. So since we're running 200 shares exposure, our total loss on Tesla for pretty much the past month and a half is $4.04 a share, $808. Okay. So if we do get a sign next week with a break even of 237.5 here, I only need it to go up about $4 to make all of this worth it. Okay. So that's why I'm resetting $10 lower, because it'll give me a bit more wiggle room. It's a bit closer to my sweet spot here, right? Rather than trying to chase it upwards, especially with these markets. So I hope all that made sense. If you need, rewind that section here. But that, I wanted to be very, very transparent what it looked like, my whole position running around 50-something thousand dollars of exposure, trying to trail the stock down during a massive drawdown, getting caught off guard by the size of some of these moves here, especially this one here, and now having to make an executive decision with all of the macro and all of the technical analysis that I was showing on the entire stock market and our main tech stocks, right? Tesla can't do it alone. So if I'm forced to reset and get these 200 shares $10 lower than they are right now and still have to make back $4, I'm fine with that, right? So I took a decision. That's the decision we're going to stick with. If it goes up and we get caught, no problem at all, guys. I'm running about 300 something shares of Tesla in my long-term portfolios anyways. This is just the trading account here, but I just wanted to be fully transparent and show you guys what we've been doing on Tesla for the past month and a bit. So yes, we are still down some money. We are still down $808, but in the grand scheme of things, keep in mind, I got assigned at 270, break even of 264. It could have been a lot worse. So it's been some pretty good risk management, if you ask me, to only be down $4 a share when the stock, even as today, guys, is down pretty much from my break even, right? We're down pretty much like $16, $15 and a half, right? So some pretty decent risk management to get it all the way down to 404. Obviously, the trades weren't perfect. I got caught really off guard here, right? Even this move right here kind of caught me off guard. I thought we would maybe take a bit longer to reset. I had to close the 212s, took a fat loss there, and then had to close the 227s here and took a fat loss and had been trying to play this range, but the markets have just not been cooperating fully. So that is where we stand on Tesla, guys. Sorry for the long-winded explanation, but since it was such a long position, guys, I had to show you. The other ones are a bit more clear, but Tesla, since we wrote it all the way down and slightly back up, I just wanted to be transparent. So I hope you guys enjoyed it. I hope you guys enjoy the transparency as well, right? As you can see, guys, like losses happen to everybody. What you have to learn how to do, guys, is how to minimize those losses, right? Yes, the markets are about how much profit can we make, but the rule number one is risk management. If you can't manage the risk, like, right, the business of finance and where I used to work in portfolio management as well, right? It's called risk management for a reason. It's not called profit optimization. It's called risk management for a specific reason. When there's losses, you have to learn how to minimize the losses. Even if you end up with a small loss, it's better than having a big loss, right? And you have to learn not to get emotionally attached to these positions either. You have to try to stay neutral, look at the grand scheme of things, the macro, the broad market technical analysis, and then make a decision on your stock. It may not be the right decision, but at least you're going with the most amount of information as possible here, guys, okay? So I hope you appreciate the transparency. I've been showing my portfolio pretty much ever since the channel started, guys. We're still outperforming the market. We still withdrawn 12, 13% of the account on the year. I'm happy. It's been a good year so far, but I do think we'll be able to really get some further performance on the year, and I'm quite excited to do it in front of you guys in full transparency and showing you guys the positions and how I run with them. So I hope you guys had a great week. Maybe a better week than me. And I hope you guys also have a great weekend. This weekend, I'll be uploading 2 videos, the MSCI and SPGI comparison video as well. And we're going to do a top 5 growth and top 5 value stocks that I'm looking at for right now. So I hope you enjoyed the video, guys. As always, consider liking the video if you did. If you're new, consider subscribing to the channel. I'd love to have you here. And as always, I appreciate your engagement. Going to start answering some comments tonight. And if you have a question, please leave it down in the comments and I'll get back to you. Usually always answer within a few hours to about 24 hours, guys. So I appreciate all of your support so far. It's been a beautiful journey. Take care. Have a great Friday night and peace.